Devon, no surprise then that the repo rate is going to stay at 6.75%.
Yeah, indeed. No surprise. I mean, consumers would have wanted a cut, an interest rate cut, but I think largely ahead of this MPC meeting, analysts were saying there's no reason for the Reserve Bank to cut interest rates. And, you know, we've got petrol price hikes coming up. We've got electricity prices going up. Consumers would have wanted some relief, perhaps just a lesser amount to pay on their bond. But you heard the Reserve Bank Governor saying, and this is very important, they are not in the business of actually fixing the economy to make things a bit more sort of livable. This really is a structural issue. So it's not the Reserve Bank's role to cut interest rates and then, fix the economy. He says time and time again, it's a structural one, and it leaves us with the prime lending rated banks staying at 10.25%. That's what you would pay. And of course, the repo rate is 6.75%.
And this outlook then, while this is some reprieve that they are staying unchanged and not going up, brings us to the issue of low growth, because the forecast now from the MPC has gone down from 1.3% to 1% growth-wise.
And I think that's a serious issue. I mean, from 1.3% for the Reserve Bank now forecasting 1%, with a contraction in the first 3 months of the year. So if we have another contraction in the second 3 months, we'd be in a recession again. What does low growth mean? It means that factories can't come up as much as we want them to. Jobs are not created as fast as we want to. It's all about growth. And he also says, look, business confidence really needs to start upping up now, and maybe we'll find that in our policy issues. But you're quite right. You know, to have a slipping growth forecast is not a good sign for jobs.
But a lot of people listening to this conversation and having heard the governor, Devon, are wondering this afternoon when the necessary reforms are going to come, because you've got the MPC saying, look, it's not our job to save or fix the economy. We've just come off an election. There are all these promises people are waiting to be fulfilled, yet things are not really on the up economically. Jobs are being lost. We know unemployment is up 27.6%. Like you were saying, food is going up. So how soon would we need to see a change on the ground before things such as the rates and everything else begin to come down?
Yeah, and I think, again, it goes back to business confidence. If you look at the elections that are now done and dusted, market reaction, rand reaction was actually somewhat positive, not shooting the lights out. But basically what it tells us when the rand and the market actually reacts positively is that seemingly, albeit very little, businesses are taking a certain good sentiment out of the political changes or evolutions that's happening in the country. We've seen that huge scale of investment that was secured by the president last year. What we need now is those billions of rands to be translated to actually building up the economy. What are the stumbling blocks, and why isn't it happening as fast as it should? Well, there's still issues about policy in this country, the land policy being one of them that keeps investors puzzled. Then we have issues of the cost of labor in the country, people saying it's not as flexible as they want it to be. You have the visa relaxation laws that could be better. There are a number of structural issues that's probably keeping investors and businesses from throwing money so that factories can be built. It can't happen overnight, but slowly but surely, perhaps, if everything goes our way politically, that can start coming right, but certainly not overnight.
You mentioned the rand there, and it's actually appreciated between today's review by the Monetary Policy Committee and the last one, because back then it was at about 14 rand. We're now at 14.40 to the dollar, so some good news, I suppose.
Yeah, well, it's actually weakened. So what that basically means is that the rand has been at the mercy of international events. We haven't had anything drastic domestically to actually bring the rand down. But, the US-China trade war that's happening at the moment, and the Reserve Bank governor mentioned it, it could have implications both on the currency front, as you say, and on the trade front for us. So remember that when the rand weakens, what happens? To import, it gets more and more expensive. So it does affect inflation. That's one of the big reasons why they watch the rand. Nevertheless, the rand is in what analysts would call safe territory at the moment, nothing threatening it to make our prices higher.
So if this trade war between China and the US is not resolved soon, that we expect will be coupled, as the governor was outlining there, with the uncertainty over Brexit, all of it adding to what is a gloomy forecast for much of the world, including us.
Yes, indeed. And I think we were jotting down the global GDP number, so global growth coming in at 3.3% this year. Global growth is important because if the entire international economic fraternity is active and is high in growth, it puts a good stand-in for a country like South Africa, who can do trade with many other countries. But what happens when international growth is lower? It puts us in the back seat, and we just do less trade activity in an environment that's becoming more protectionist, I need not tell you. So that's a bit of a downside for us, that, you know, if we have global growth that's subdued, it's not good news for us. So yes, indeed, that global growth rate has been forecast on the downside.
You speak to a lot of economists on News Hour. What is the expectation as far as a technical recession is concerned? Because, again, in that short briefing with the media, one of the journalists asking if we are facing another technical recession sometime this year. We saw one last year. Are we in for a repeat?
Well, what's happening and how the governor actually answered that was, he said, look, you know, you had manufacturing and mining not performing as we wanted to in the first 3 months of the year. And they contributed to slow growth in the first quarter. In fact, not slow growth, but negative growth. So we've got a technical recession, a contraction in the first 3 months guaranteed. What happens in the next 3 months of the year, I suppose, again, it will all be based on confidence and how active the economy goes about doing that or unfolding. I hardly can answer that question to tell you whether we will have a recession. But low growth, yes, less than what we expected.
All right, ENCA business anchor Devin Morgan. Devin will have all the details and a full breakdown, I suppose, of these latest numbers from the Reserve Bank on News Hour, 10 p.m. tonight on ENCA.